Liberation Day? Oh yeah, we got liberated. Volatility got liberated. My name is Blake Morrow, and you were listening to the week ahead video. And wow, what a week! I know where to start. I think I know where to start, and I need to get started because we have so much to talk about. I do want to mention that Nick isn't going to be here this week. He's hanging out with one of his friends, so I'm going to be covering the S&P, getting into some of the indices. So make sure you stick around because I have a lot of work to do on the charts based on the volatility that we've seen. And boy, have we seen a massive amount of volatility. The bear flag pattern completed on the S&P. And at this point in time, I want to have a little conversation with you guys about this. Let's talk about the S&P really fast. We have talked about the S&P breaking down. I'll go into it later, but I want to talk about the importance of where we're at right now and the oversold nature that we're at. I tweeted something or posted on X that we're at levels that the market is very oversold, and any positive news could elicit a very big response in the markets, a big short squeeze. I've been through a few bear markets in my 29 years of trading since 1996. It was 97, so I guess 28 years. I've been through a few bear markets, and what I've realized and what I've seen over the years is bear markets produce massive short squeezes to a point where they're convincing enough to make you believe that the trend has changed. I believe we are developing a bear market right now, but I believe that we're in a situation where we could see a massive squeeze in equities, squeeze in risk, and it has to do with trade. I mean, that's the bottom line. It has to do with tariffs and negotiations, and if there's some progress there, that could really kick off a big reversal. Or if the Trump administration backs down, or maybe there's negotiations with China, who knows what would cause it and what would be a catalyst of it. But we have to be aware that we are in that zone, this area, I would call it, of support, where now that we've gotten down to where we've gotten down to, the markets could give us that type of bounce anytime. All right, so I want you to be very careful with that as we head into the next week. That's like situation number one. Also, what I want to talk to you guys about is what's happening next week. I personally feel that whatever is happening in macroeconomic data, it's not really mattering a whole lot, but we do have CPI inflation data this next week. That's something that we should be paying attention to with the CPI. And producer prices next week. We have UEDA speaking and the FOMC meeting minutes, and you can follow along on your ForexAnalytix platform. But really, this market, all it really cares about right now is tariffs, and that's why I'm going to actually spend some time with you right now, retooling some of our charts, going through what we've seen, and making some key development and pointing out some key developments in the markets with you guys. So we've got a lot to do. Like I said, we've got a lot of ground to cover. Before I do that, I want to talk about one other thing. So the tariffs, they're going to affect us all big time. After this week and seeing what the Trump administration has done with tariffs, I mean, we're looking around at our costs as individuals, realizing the prices of everything's about ready to go up. ForexAnalytix, we're going to do something about that for you guys. Now, we've never done this, so hear me out. We have, if you've ever seen our pricing, we're at $150 per month, basically for premium. You can do a semi-annual membership if you want. But a lot of traders like yourselves, you guys use the a month to month. But $150 a month when prices are going up might not be. It may be tough to do. So what we're doing starting next week, we will be offering a very steep, matter of fact, the steepest discount we've ever gone on a month-to-month basis. That means if you take the offer that we're going to give you next week, not this week, next week. You can lock in those prices indefinitely while you're a ForexAnalytix subscriber. So hopefully that will help ease your burden a little bit. Now, Why am I mentioning this to you right now? I could have just mentioned it to you last week or next week. Well, because right now we have a get your first 10 days for only $1. So this right now, today, as you're watching this is the best time to take advantage of that, because you can take advantage for $1 for 10 days and then roll into the offer next week when that offer takes place, because you're going to be prompted to get a subscription after that. Because if you're happy being in the chat rooms using the ForexAnalytix platform, between now and next week, then you can go on with locking in those prices that are going to be the cheapest. I want to say the cheapest prices that people have, the best prices that people have been at for probably about 5 years, maybe 4 years, something like that. Because what we do is we grandfather folks in. So if you're back before we raised prices years ago, people are locked in at much lower prices. So you'll be able to lock yourself in at a month-to-month rate that is at a substantial discount. I'm not going to tell you what that discount is. You got to come back next weekend to find out what that special is. All right, so anyway, I just want to get that out of the way because it's really important after this week, what we've seen, because like I said, this is the tariff issue. I mean, we are citizens of this world, right? We are at in certain respects, we are at the mercy of them, and there's not a lot we can do as individual citizens. I mean, we can all say, well, we can vote, but realistically, we are at the mercy of powers that be. So we can only control what we can control. So that's one of the things that here at ForexAnalytix we're going to do. So if you like it, make sure you give us a thumbs up. Subscribe to the channel so you don't miss next week's video. All that fun stuff. All right, guys. So we're going to get into the charts, and we're going to get into the charts that I use here on the week ahead video. And I'm going to come back to the S&P, so don't worry about that. Let's start off with the euro. So the euro hit the long-term multi-year trend line as we were expecting last week, around the 111 level, 111.50. We went as high this week as 111.49. And I think last week, if my analysis was correct, I said 149.50 or 111.50, excuse me. And if my memory serves me correctly, I was off by 1 pip after this massive move. I mean, we rallied from 108 to basically 111.50 in a week. It's amazing, right? It's an amazing move, but the euro's obviously giving back some of that right now. One of the things that we should be paying attention to at this point is the euro. A lot of people wonder if the euro is going to continue higher. One of my friends in the chat room, which once you're in the chat room, you'll meet him. His name is Benedict. He said, "Hey, this looks a lot like a cup and handle pattern." And these are the types of conversations that you'll have, in the chat room. Here's the ForexAnalytix chat room. Now, this was yesterday, so you can probably go back and see where we were talking about the cup and handle pattern. But all these conversations are having conversations with me. You can have it directly with me. Like, for example, this is Michael asking me about the euro dollar. He says, specifically we're at 109.33. Does that make less attractive as a trade? I answered him on another thread, and he said, got it. I said that was a spot, to be on the long side of the euro at that moment intraday. So we talk about these types of conversations throughout the course of the week, and these are the types of conversations you're going to be seeing in the ForexAnalytix community. Anyway, what we mentioned here is this right here is a potential cup and handle pattern. You can see there's your cup, there's your handle. Now, here's the thing: if that takes hold, let's say, hey, Benedict, if that actually does take hold, because I know he's probably listening to this right now, the measured move of that would be up at around 115, which makes sense that could potentially happen with the euro on a big breakout of the 111.50 level. So anyway, let's just update an analysis on the euro. Look at sterling. We've seen a really massive reversal. Now you'll notice that we had this channel before, so I think what we should do is let's tighten it up a little bit, right? So sterling had a really big reversal today. Now You know, that big reversal was really seen in the euro sterling, but I would be a little hesitant about being short sterling with this channel support right here. But we did reject the 78% retracement. We rejected channel, channel resistance. If we do break through this 200 DMA, I mean, that would really open up the door for further downside with sterling. So that's something I think, we should pay attention to, especially in the event that we see some sterling strength come through. The Aussie absolutely got blasted. This was as a result of China's announcement that they were going to slap an additional 34% in tariffs on the U.S. That came out last night, and the Aussie dollar, as you can see, got destroyed. We're down over 300 pips in the Aussie dollar. The Aussie is a China proxy, so the only thing that's going to save this at this stage in the game is not copper. Copper got destroyed, guys. I'll cover it in a bit. It might be risk appetite, but that is going to have to be hand in hand with China and the U.S. having some negotiations, because right now, as you guys remember from last week's conversation, the bear flag pattern points to a move down to about 55 cents eventually. That is a very bearish setup that we're seeing in the Aussie dollar. So it looks like we're going to close here this week. I mean, it's Friday afternoon. I can't see the Aussie recovering unless it's some headline-driven reason, but it looks ugly. Look at the Kiwi. The Kiwi also at some major support. Look where we're rejecting, which is once again the 38% retracement. These are some big levels that we're really rejecting here in the Kiwi. And look what happens if you break. And you break 55 cents. The question is that you might be asking is, where do we go? I mean, the next stop looks to be 49 cents on a breakdown. The dollar CAD. So the dollar CAD has probably been one of the more neck-breaking type of moves that we've seen. We talked about the move out of the triangle. It produced a move lower. It has, but what we've seen, just this week is and let's zoom in here. What we've seen is that breakdown just kind of unwind, and so at this point in time, we might as well just delete that and realize that, hey, we're might head back to the 50 DMA. It's very sloppy. Why is it so sloppy right now? Well, it is because of the moves that we're seeing in risk. I mean, the dollar is being torn between two things. Risk aversion, so people want to buy the dollar. Tariffs, because the dollar should strengthen now that we're imposing all these tariffs. But the flip side is U.S. exceptionalism is waning. Look at U.S. equities versus European equities. Look at U.S. data. So you're seeing the dollar being pulled in both directions, and that really is affecting our neighbors' currencies like the Canadian and the Mexican peso. Speaking of the Mexican peso, I want to take you to that really quick, because now we have been afforded this week the luxury. So let me choose my words carefully here. We have now been afforded the luxury of understanding exactly where the breakdown point is in the US dollar Mexican peso. And that comes in at 184, 185. Okay. Now, this is a daily chart. You can see the big bounce here, but I love it when the market tells us exactly where we need to be bullish or bearish. We call that a bull bear line. That if you're utilizing ForexAnalytix, you'll see the bull bear lines, written by some of our staff here. But with the dollar Mexican peso, after what happened today, it seems very clear that is the level that it turns bearish. Okay. Some other things that we should probably really discuss right now is the massive moves that we've seen in the US dollar Norwegian krona. It looked like it was breaking down, but then after today and the move in crude oil, you can see the US dollar Norwegian krona is up 4% on the day. I mean, that is a massive move in the US dollar Norwegian krona. And actually, we could probably do this. You guys get a little bit of a little lesson in chart drawing today. Without me explaining, I'm sure visually you can see what I'm doing here. I mean, we're just back at the previous support, current resistance, 50% retracement. Seems like this is some pretty decent resistance. So, breakout from here would really take us back above 111, above the 200 DMA, 50 DMA, that type of thing. Dollar yen, massive move this week. A massive move to fresh lows. Now, let's delete some of this stuff since we obviously haven't looked at the dollar yen in a while. So it's this is a good as time as any to make some changes. And what you'll notice here is now, if this is a solid low, and the reason why I think it might be is because you can see it end up being a false breakdown. So if it is, and we get a continued rally in the US dollar Japanese yen, my assumption is we are going to find some resistance on any move back up towards the 200 DMA to the 50 DMA. And then also, if you want to look at just really quick, since we're looking at the yen, Ichimoku cloud, the base of that cloud that we're under is going to be around the same area. So those are going to be areas that are really key resistance for any rally in the US dollar Japanese yen. Now, I covered FX. I do want to talk about equities. You know what? I should actually talk about the dollar index really quick. Let me do that. So when you're looking at the dollar index, you can see that the dollar index just basically hit previous support. That's current resistance, but you don't know if we're going to hold. We'll see by the end of the day. But the dollar index is very, very heavy at this point in time. Had reversed quite aggressively at this point in time. Now I'm going to get rid of this longer term trend line and just realize that the dollar index is finding buyers at the 88% retracement. So I think moving forward, this is going to be the level that I think is probably pretty important. Obviously, if we get above this resistance here, that could produce even a further squeeze in the dollar index. I just met with Jim Welsh and Macro Tides, and he thinks from an Elliott wave perspective, we might be creating the first wave, which could take us, actually the fourth wave of lesser degree, that could take us back above 104 or so. I'm not sure if I subscribe to that theory just yet, but it's something to keep in mind. Okay. Couple other things we're going to talk about. We're going to talk about equities. I just showed you the S&P. Now I want to show you longer term though. You'll notice that let's look here. Let me delete that. I'm going to delete this. We don't need those extensions anymore. I'm just going to try to reduce some of the drawings that we do. This is the low that we got to in COVID. You guys remember that thing when that happened? Yeah, when we had that COVID lockdown. You'll notice right now, and you can see it right here, this is the 24% retracement right there that we're going to close below of the entire move over the last four and a half years. The risk is, in my opinion, is if you break through this level right here, you break through this support, that should open the door for a move down towards 4,800 in the S&P. So we should see a further move like that. Now, is that entirely possible in the days ahead? It sure is. And so, I wanted to take a look at the S&P, and I want to look at some other indexes as well. I mean, you look at the NASDAQ. NASDAQ completed its bear flag pattern. We had discussed this 2-3 weeks ago. Dow also, you could argue the Dow's completed its bear flag pattern. Remember, I reserve these charts for you guys on the week ahead video. That's what I set them here for. So you complete these flag patterns in different indices. You have to be a little bit more cautious. Excuse me, I don't know why that didn't work. Oh, there it is. Okay, so now you have to be a little bit more cautious. Just because you complete a pattern doesn't mean you automatically reverse. But this is where the caution flags do come out. Once you complete a pattern, you're like, okay, it's done what it needed to do. Give me a cue to see what happens next. So could we see some consolidation around here, a bounce around here? The answer to that question, in my opinion, is yes, we could. Okay. Now, but we're heading into the weekend, and I'm sure you guys have already answered this question because you're watching this over the weekend. Do you take the risk going into the weekend? Yeah, I don't know about that. Now, we talked about copper. Copper, we said, remember last week, a break below, after tariff, after the Liberation Day is the day you want to be short copper. Well, guys and gals, I mean, this was our trade setup from last week. So I guess I'll have to look at percentages when we'll come back to this. All right. Gold. Gold has a throwover. This is important to realize at this point in time. So keep your eye on gold with the technical throwover there. Silver looks like absolute garbage. You can see how silver is completely reversed. I think the wise thing to do at this point in time is let's clean up some of this stuff. I think we could do this. That's good. Let's get rid of all this garbage, whatever that was. Looked like that was a descending wedge. Maybe a flag that was setting up at one point. Again, I haven't used the silver chart with you guys in a while, but I think you could see some downside targets here. Should silver break 28.70, we might trade as low as $27 in silver. That would be my next best guess for a move lower in silver. Now, if you guys haven't taken a look at yields have the head and shoulder pattern. We've been talking a lot about that. That is currently underway. This is one of the things that if you guys are looking at this move in yields, now I know it's bouncing a little bit right now, but this should tell you what the longer term trajectory of the dollar is overall. You know, if yields, I mean, we could bounce here. You could bounce like that, you could go like this, and the dollar could do whatever it's doing. But the longer term trajectory on this pattern is lower. And if it's truly lower, that means that the dollar should reciprocate in one way, shape, or form, whether it's in the dollar yen moving lower or maybe the euro dollar moving a lot higher. One last chart I should cover with you guys. Crude. Crude has broken a major level of support. And you look at the crude chart, we are at levels where, you know, there's not a lot of support here if we really continue this breakdown. So you start getting below 60, and that's a pretty good indication that the market's thinking that we are going to have recession. It's going to stick with us for quite some time. All right, so anyway, those are the major markets right now, and obviously there's a lot of volatility. You can look at the VIX and you can see volatility is spiking to levels that we have not seen since that was a volatility liquidity issue. That wasn't really it. I kind of dismissed that one. This is COVID. So you can see the volatility right now is quite substantial. So what's the best thing to do during periods of high volatility? Well, let me just tell you. Well, first of all, it's trader funding program, but here's something I need to tell you about this week. Yesterday, which was Thursday, April 3rd, I think we had the most, or either matched the most or had the most ever traders pass an assessment on the one-step assessments for the trader funding program because of the volatility. I've been explaining this to you guys for weeks. When we're in periods of high volatility that you're seeing right now, this is how we as traders make money. And this is the time frame that's the easiest for you to pass an assessment. Proof was in the pudding yesterday, as we had more people pass an assessment. And obviously, if you're not even in assessment, you just go into a live trading account, which you can access. This is where we make hay while the sun is shining. The sun is shining when volatility is high. All right, so if you want to learn how to access larger amounts of capital, this is the time to do it. If you don't have a $25,000 account that you're trading, or a $250,000 account, or $1 million account, well, check out the trader funding program. here are the simple rules. You have to make 10% on that account with unlimited time without losing more than 6% on a maximum drawdown basis. That means, on a high watermark maximum drawdown basis. That means, let's say you have a $100,000 account. You have a $100,000 account, right? You're trying to make 10 grand. Well, if you make $1,000, you can't lose more than 6% of that 101,000 because you went from 1,000 to 101,000. You can't lose more than 6% from there. If you go to 105,000, you can't lose more than 6% from there. But all you have to do is get to 110,000. Once you get to 110,000, you have passed your assessment. You are now trading somebody else's capital and somebody else is taking the risk, right? So, and at the same time, you get involved for a period of time with the ForexAnalytix community. So if you want to learn more about the trader funding program, just go to our website and check out the trader funding program. You can skip the assessment if you want. It's just the more affordable way to go about the trader funding program. You can go directly into a live trading account, and you can keep up to 90% of your returns. Okay, so it's really a great program for so many traders. And this week, it's been exceptionally great for our trader funding program traders. All right, so guys, this is the point in the video that I'm going to go into the review of last week's trade setups, and then I'm going to give you this week's top 3 trade setups. Are you guys ready? Well, if you're ready and you love these videos, make sure you jump down. I'll wait for you. I'll just jump down in the comment section below, and it helps our algorithms when you do this. Say, hey, Blake, love the video. I love that because I love reading it because I read them, and it helps our algorithms. Now, also giving a thumbs up, that helps too. Subscribing to this channel is free to do, so this way you don't miss any of these videos. But if you really think that these videos are instrumental for you every single week in helping you come up with a trade plan, then please do those things. And when you see us on X or Twitter, or you see us on Facebook, share, like the videos, share them, retweet them, whatever you do. I'd really appreciate that. It's one of those things that really makes me feel good. When I see you do that, I'm like, oh man, thank you for doing that. It's automatically what I think. So appreciate it. All right, so let's go over trade setup number 1 last week from my notes. Possible false breakout in copper, short below 5. Well, let's just say you decided to short copper after Liberation Day. So let's say there's your open price right there. It went as high as 494, but let's just say you just shorted it right at the open. You made 9.5% on that trade in 2 days. I don't know when you would ever, and I've been doing this, like I said, 28 years in trading. I mean, I got my Series 7 license to be a stockbroker in 1995. So 30 years ago. In my 30 years in the markets, 30, I've never seen a 9% move in copper in 2 days, or let alone a week. Maybe I'm wrong. I don't know. It's a big move, guys. So trade setup number 1, did it work? Fabuloso. Trade setup number 2, short the euro dollar on the weekly trend line near 111. Well, if you shorted it at 111 and currently it's at 109.44, you did good. You do good. I would say that trade setup worked amazingly. Okay. Trade setup number 3. This is from last week, guys. Last week. I gave you these last week. Not knowing what was going to happen this week. This was last weekend. Trade setup number 3. Short S&P below 5,500. Repeat from the previous week, because the previous week it didn't happen. Well, if you shorted at 5,500, you're up 7% in a week, 7% in 2 days. I mean, when's the last time that happens? So those are some good trade setups. I hope it yielded you some badass returns this week. Again, if you liked that from last week, give me a thumbs up. Subscribe to the channel. Tell me down below that you appreciate it. All right, so you guys want to hear what the top 3 trade setups of this week are? It will be near impossible to match that, just so you guys know. It would be near impossible to match. So, trade setup number 1. Let's say on this chart, I'm looking for a move in the S&P down to about 4,800. So anywhere below 4,900, right here, to 4,800, I'm looking for a long, for a bounce. Why? Let me go back and show you. That was the previous all-time highs from December of 2021. And we're getting close to channel support. Do I think we're going to see a bounce around those levels? I do. Is it going to be the low, the ultimate low? I doubt it. Will it be a level that we can play from, we can trade from? Yes, that's the way I'm looking at it. So I think you get a nice tradable bounce from there. Will we see it? I know some of you are like, oh my God, Blake, I hope we don't see it. Me too. I actually hope we, well, I do. From a investment standpoint, your, retirement accounts, yeah, I hope we don't see it. But from a trading point of view, I do. So anyway, if we get down to 48 to 4,900, I am looking for longs. Trade setup number 2, I'd like to short gold now. Like I said, I was on with Jim Welsh from Macro Tides, and he's like, I'm expecting lower prices in gold. But technically, we have now had a throwover. So technically, I would say, and you guys know me, those of you that have known me for 20 years now, you know that I love false breakouts, because false breakouts lead to breakdowns. So I would not be surprised to see us drop all the way back down to 2,800, which would be channel support by the time we got there, right here, right? I would not be surprised for us to see 2,800 and maybe even lower, longer term. So I'm looking for a false breakout of gold and to be short. So short rallies in gold up to 30.50. We might get that. That's only where we're currently at is 30.29. So we might get a 20-point rally in gold early next week to see it. Okay. Trade setup number 3. It's a repeat. I would like to short the euro dollar once again at 111.20, as close to this trend line as you can possibly get. Okay. But you have to realize stops have to stay at 111.50, because a break above 111.50 would be uber bullish. So I'm going to try giving it a shot on the short side once again. By the way, I was short euro this week too with you guys. So we get above 111, I'm going to be a seller. We get above 111.50, everything's changed. All right, guys. My name is Blake Morrow, and you've been watching the Week Ahead video. And once again, if you think this video is beneficial to you in any way, shape, or form, please, thumbs up, like, subscribe. And once again, for those of you that have been listening to these for the last, 8 years that I've been recording them, thank you very much for spending your time with me. I know your time's precious over the weekend, and it's your most valuable resource, time, and you're spending it with me. So I do appreciate you as a result of that, and hanging out with me. So I look forward to seeing you in the chat rooms, because on Sunday night it's going to be Berserko. So remember, take your trial today, not tomorrow, today, so you can have as many days to use ForexAnalytix as possible before we enact our sale next week. And guys, it's a big sale, something we've never done before. I will see you on the F.A.C.E show Monday morning, or I'll see you in the chat rooms on Sunday evening. You guys have a great weekend. Thanks. Bye-bye. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.